In general, the exotic car market will exaggerate any underlying economic trends. As the market goes up, the car market goes up even higher. If the market crashes, the car market might crash even harder than that. And that makes sense, right? If there's any kind of a luxury good or unnecessary purchase, when people are struggling to make their mortgage payments or thinking about firing their employees, buying stuff like that doesn't make a lot of sense. So you see the same thing in jewelry and vacation homes and boats and anything else that people buy when they have excess money. And so like in 2008 to 2010, when we saw a big contraction in the economy as a whole, we saw an even bigger contraction in the exotic car market. And early in 2020, as the pandemic began, we saw kind of a pause in the economy where people really weren't sure, and then a slight dip. But since then, the growth has really been hard to explain. Now, of course, there have been a lot of external factors operating on the economy in the form of governmental subsidies and stimulus bailouts and all sorts of grants and forgivable loans and things that we have seen the US government do locally in order to avoid what would seem like an inevitable contraction in the economy. Now, of course, that hasn't really happened. In fact, the S&P 500 and the Dow are up almost 30% in the last year. It's crazy to see just how healthy the economy has been when the world, it appears, is as unhealthy as it all seems to be. So today I wanted to spend some time discussing some of the factors that are definitely at play in the exotic car market and explain sort of why we're seeing some of the crazy transactions, the crazy sales numbers that we have in the last few months. Now, a lot of this began with a true supply and demand issue, both on a new car front and a used car front. Now, on a new car front, we did have shipping issues, microchip shortages, and a lot of factors that made it harder for new dealers to have inventory, and certainly we had shoppers eager to buy all of these cars. On a used car front, we had a lot of generous floor plan lending, these big lines of credit that dealers will use to just go to an auction and buy everything. So a lot of these independent high-line dealerships were buying everything they possibly could at dealer auctions without really caring if it was in line or out of line with the market. And so not only did you see some low margin transactions, but you saw some long-term days in inventory and some very retail looking numbers in wholesale auction results. Now, obviously, people seem to have a lot of money, and that's hard to make sense of when there are a lot of people whose jobs were compromised when everything got shut down. But we know that their income was in some cases guaranteed, but of course the people who are not being evicted are not necessarily the same people who are out buying exotic cars. But regardless, there was money in the economy that wasn't there naturally. And so whether it's a PPP loan or somebody not having to pay their rent, in either case, the fact that people have more money gets magnified through the economy and into the exotic car world. But if you think about the case of a small business owner, in many cases they still had demand for their product, but in many cases they could not travel. They had lower real estate costs, they had lower utilities costs, and the things that really do impact the bottom line of a very small business kind of went away. And those are very quintessential players in the exotic car buying world. But they had a lot of money and they didn't necessarily have a lot of other ways to spend it. They weren't going out to restaurants, they weren't entertaining clients, they weren't spending a lot of money in travel, they weren't going on vacations with their family, and all of that money was very easily diverted into the exotic car world. Now, why would they focus on cars? An interesting phenomenon that I always observed at Lamborghini Atlanta, if you ask any car dealer, they'll tell you that this is the case, especially in the high-end brands. The busiest week of the year is always between Christmas and New Year's. Now, if you're a Honda or a Toyota dealer where you're trying to make a month, make a quarter, make a year, and sell as many cars in those few days as you possibly can, that's not that uncommon. But we saw in the exotic car world a huge spike in leads. People were actually on our website browsing more during that week. And you would think it would be a very busy week for people, especially high net worth people who are entertaining out of town family and things like that. But in reality, they got tired of that family and they sat at their computers looking at cars, trying to avoid that family, and they were very, very bored. Some of them might have been using these cars as end of year write-offs and they wanted to do some last minute deals. But regardless, when people are bored, more exotic cars get sold. And what happened the last year and a half? A whole lot of people got very, very bored. And if they had a little bit more money, exotic cars became the way to spend it. Now, they also had unique abilities to borrow from 401ks and do other things that would have normally had tax consequences without those consequences. And so that's another governmental force at play that is being magnified into the exotic car world, because they started to see that certain cars absolutely were going up in value. These were very low mile examples of significant significant Japanese and German cars, which was a little bit extraordinary, but at the end of the day, they were cool cars that were hard to find in rare low-mile examples. We saw some very logical cars appreciate in value. Your Carrera GTs, your Lexus LFAs, SLRs to some extent, Diablos, Countachs, significant Murciélagos. The cars that we've always known sort of deserve to be a little bit more valuable. Honestly, most of them became more valuable in the last year and a half. And so that all made sense, but you always are going to see kind of a coattail effect where other cars follow the same trend. So if a Carrera GT goes up in value, GT2s and GT3s and things like that are also going to follow suit. If we see significant Diablos go up in value, what about the less significant ones? Is a 91 two-wheel drive car that's not all that great to drive and not necessarily as rare as an SV or an SC or a 6.0, are those going to go up in value? Well, we saw that they did. And beyond that, we saw that all exotic cars just seem to climb in value, and not necessarily the ones that you would have expected. I mean, we know that buyers in their 30s and 40s that have a little bit more liquidity at this time in their life are going to buy the cars that were really cool when they were young. It's why I'm not unique in being out there trying to look like a lottery winner from 10 or 15 years ago. Those cars in general have been very, very healthy from a market perspective. We also live in a world of increased visibility for these transactions as they happen online. A lot of these things were happening on Bring a Trailer or Cars and Bids or the MB Market or any of these other online auction marketplaces or even Facebook Marketplace that are popping up all the time. And so that means that when a high watermark happens, it gets very empirically documented, easy to share, sent out on mailing lists, and then people are really, really aware that the market in general is rising. And so that allows this kind of anticipation, this gold rush of trying to find these really special cars, especially when you see that a car that may have sold 6 months ago is now selling for 20, 30, 50% more in the same type of environment. Now, I've talked a lot before about how people make money on cars, and there's really three ways. Dealers make money between a wholesale and a retail margin. They buy cars in a circumstance very fast, very liquid, no inspection in most cases, and then they clean them up and they market them in a better way to a widespread market. There's also an arbitrage, which is similar in that you take a car from a limited market, you take it to a larger market, and that larger market inevitably pays more. In these cases, though, it seemed like the third thing, which is genuine market appreciation. Now, in most cases, the other two get called that a dealer has just bought the right car at the right time, or a car flipper has actually bought the right car as it appreciated, but the values were never different. If you sell a car in 30 or 60 days, that is in general the same market condition. Here, we are seeing the market as a whole appreciating cars more, which means the car values do appreciate. And so seeing those trends does develop a bit of a bandwagon effect. And that's what fuels bidding activity. It's what makes this all kind of perpetuate. And we've absolutely seen that a lot in the last few months. Now, there's also something happening that I would call the Bitcoin effect. And I don't mean that crypto millionaires are out there impacting the market with all of their new wealth. I mean, certainly that has happened, but that's not enough to really change the way a market works. What I mean by that is, in the world of cryptocurrency, there are a lot of people participating in investments that they do not fully understand. Now, the stock market's always been that to some extent. They're investing in the business activities of businesses that they don't own, know, or really even care that much about. But in the case of cryptocurrency, that's not necessarily backed by a tangible asset, not that the US dollar is either. We had a situation where there were a lot of people making a lot of money and actively engaging in a marketplace without really understanding exactly how it works. And what that means as a culture is that we become a lot more comfortable in that idea, that we are participating in a marketplace that we don't necessarily have to understand to take advantage of the appreciation or the investment opportunity that might be happening there. So there's plenty of people that don't own a lot of cars, that haven't owned a lot of cars in the past, that just have some money, have some boredom, and they go out there into the marketplace and they pay whatever the market seems to bear because either they don't know any better or they just don't care. They've heard or they've seen that values are going up and they're just buying stuff that they like. Now, hopefully it is what they like and not necessarily a pure investment play. Because one thing I have to constantly remind people of, and Doug Tabbitt from Switch Cars does an excellent job of this, he'll say that you should not treat cars as an investment. Now, from a short-term perspective, sometimes that does work, I will say. However, on a decade or more time frame, no car has ever beaten the stock market. Now, certainly there's cars that have doubled in value in a year, and that might cover a decade of activity, but that didn't happen in years 2 through 10. That happened very quickly. It might even happen over 2, 3, 4 years, but it won't last a decade. So flipping cars can be a great way to make money. Again, it may not always be appreciation that is actually happening, but regardless, this will not sustain. And in fact, honestly, if I had to think of any car that's beaten it for more than 5 years, there might have been a window following Enzo's death where 250 GTOs did that, but again, I'm not sure they did. They went up very, very fast, almost $1 million a month in the value of some of these cars, and then it was periodic transactions that again happened in a moment, but didn't reflect this global trend in car value. I was also talking to John Tamarian from Curated about this week, and he mentioned something that I found to be very, very fascinating. He called it the YOLO effect. So you only live once, and we are absolutely seeing that. If anybody could even remotely justify cars as an investment, there are certainly a lot of people that are making that their investment. They're taking money out of savings accounts and college funds and investment accounts and places where it probably needed to be a little bit safer, and they're buying cars with it. They're like, if we're all being told constantly about how mortal we actually are and all these risks of death that we're encountering, why not spend the money that I have on something that I can enjoy that may or may not go up, even though they probably all believe that they are going to go up. And I think that's why you're seeing some of these cars that don't necessarily make sense going up in value. Cars like Aventador SVJs and SVs that are great cars, they're wonderful cars, but they're not that rare, and never have we seen a really, really special even version of a V12 Lamborghini immediately gain value that way. I mean, the idea that a special SVJ Roadster is somehow worth $200,000-$300,000 over MSRP is rather unprecedented in the world of Lamborghini. 10, 15, 20 years later, for sure, that absolutely happens, and we've seen that time and time again, but not immediately. And by that same token, Huracans that are 6 years old now trading for within 20% of MSRP when they were a whole lot less just a few short months ago. Things like the Urus, Urus, however you want to say it, that's a very, very hard thing for me to wrap my head around, because I sat in the dealer meetings 10 years ago as Lamborghini kicked back and forth the idea of, do they bring out an SUV or do they bring out a four-door sedan? They knew they wanted something that could appeal to the mass market, but at the time, I think Porsche that year had sold like 100 Cayenne Turbo S's, so at $135,000, $40,000 price point, they could not sell these high-performance SUVs. So the SUV market didn't seem that great, with the only two outliers ever being brand new Range Rovers. The 13s and 14s were being exported like crazy, and so those were being propped up by an arbitrage opportunity, and G63s, which had done very well, but again, those were very much anomalies rather than something to kind of bet the brand on. And sedans didn't have much better track record, but there were just more of them that had done better, and there's more ways to sort of make your car special than the ways that SUVs are all same platform and just sort of rebadged. But regardless, Uruses were almost immediately and still are over MSRP propositions. And the idea that a $250,000 SUV even exists, much less that it's worth 10, 20% over sticker, is crazy. The same, obviously, for C8 Corvettes. They're still worth 20, 30 grand over MSRP in some cases and in some markets, with the Z06 announced and fairly imminent, but people are still paying up for a car that is absolutely not rare. Now, truly rare cars, and I would say that is 300 or less really good examples still available throughout the world, those deserve to go up in value when there's an audience for them. There are cars that are rare because nobody wants them, but if a car is that rare and actually cool from a cool brand that has some kind of pedigree, then those sort of deserve over time to be appreciated. But a lot of these cars that are absolutely not rare, fairly new McLarens, every kind of Porsche, those are a little bit difficult for those of us that have been in the exotic car world for a fairly long time to wrap our heads around. So the logical question that gets begged is it all about to collapse? Is this some bubble that is going to get popped? And my answer is no. I believe that all of the factors are fairly genuine, even if they are sometimes misinformed. People do have more money to spend, they are bored, they are interested, and they are seeing legitimate trends. They may be somewhat baseless in the appreciation that we're seeing in these cars, but they're not overly leveraged. It's not like banks are stepping up to loan someone $200,000 on a low mile Mark IV stock Supra. Those are, in general, transactions that are funded externally. Either they're money that was already already somewhere else, or that money that somebody just honestly had. And so what we will see is that dialing back. Over time, people will have other things to spend their money on. They'll be less bored, they'll be less trapped, they'll be more interested in growing their business and investing elsewhere and doing things that maybe are a little bit more traditional with their money. But that won't be a light switch. It's not the same thing as mortgages collapsing in 2008. It's not the same thing as car loans evaporating like we saw shortly after. In these cases, yeah, some of these cars are going to go down in value. They'll become more like we've seen their predecessors or any other cars like them perform in the marketplace in a general way. But I think that won't happen abruptly, and that means I don't think it's going to be a bubble popping. I mean, yes, the world will come back to reality, and a lot of these cars that are truly rare that have gone up are going to stay really, really valuable, and the ones that aren't truly rare aren't going to be as valuable. That all makes sense. The ones who get replaced by something that's actually better, those are going to start to come back down. But I don't think it's going to be a losing 10% a month proposition like we have seen in the exotic car market before. I think it'll just be some kind of lower than you'd expect transactions in these very public marketplaces, and then the market as a whole kind of gets sobered up. So if you want a car, what should you do today? Well, as always, buy what you want, because again, while there might be short-term flip opportunities, and if you find a great deal on a car you know well and you know you can flip, there's nothing wrong with doing that today, like there's never anything wrong with doing it at all. But if you're just buying cars as an investment, it's probably time to be a little bit more careful about that. Ask someone who has seen the market come and go if they think that's really a worthwhile target for your investment money. And most of them should tell you no. But regardless, buy what you want to drive. That's always my advice. You will never get too upset by a car that you're putting a lot of miles on and enjoying. Even if it goes down in value or depreciates or whatever you want to call it, you're gonna love it as long as it's making you enjoy every mile you get to drive in it. So I hope that helps make a little bit more sense of the crazy economic world that we're living in from an exotic car perspective. I wish you all the best in your own car ownership expenses, flips, and things like that. Thank you so much for watching.